Okay, so I'm sure you're able to see my screen now. Hello? Okay, thank you for that. So a restaurant business operates in Lusaka industrial area. It has the raw material there of 5 kwacha per unit. Also spends 2 kwacha per unit on electricity. Then it pays the salaries of 2,500 per month, pays business rather 500 per month on rent. Then there's also total monthly salaries of 7,200 there. These salaries relate to 6 employees. So these 6 employees are on contract, which allows them to pay the same amount of money, even if they decide not to work, or even if the demand reduces of Ushima, they'll still get that 7,200 per month. There is also the selling price there, according to the question, is 15 kwacha. So assume this business sells in Shima only. So if the budgeted sales and production are 1,500,000 plates per month, what is the budgeted profit or loss for the month? So this topic relates to BEP, break-even point, which we are building from the previous video, but we in as much as we looked at BEP, but I'll explain it as if it's for the first time. So there's also this issue for profit and loss, which we will look at. I'll explain it. So the first thing that we need to look at is the BEP is given by fixed cost over contribution margin. So that contribution margin is selling price minus variable cost. So the fixed cost, this F is for the fixed cost. These are fixed costs, they do not change. It can be salaries, it can be advertisement, it can be rent. They are fixed. Other incidents that you pay which are fixed, they do not change over time. Then that is the fixed cost. Then we have the selling price. So the selling price, it's at how much you sell your product or services. So you look at, okay, we have this fixed cost, then we have these. This is the selling price that we're going to use. So you use words like charge, selling, sale price, and so forth. And then we have the variable cost. So the variable cost, these change over time. So they are expressed in units often. So you can find that electricity, material, labor cost, and so forth. So you need to identify these costs all the time for you to find what? The BEP. So when you look at this question, says so this selling price minus variable cost is the same as the contribution margin. So it's the same as the contribution margin, which I already explained in the other video. So the question says if this company has budgeted the production of 1,500 plates per month, what is the budgeted profit or loss for the month? So the first thing that we need to do here, we need to identify what are the costs associated in this business. So we're told that a restaurant business operates in Lusaka industrial area. It's raw materials. So that raw material is what? So we have, that is a variable cost. So the each raw material costs 5 kwacha per unit, you see. So 1 unit 5 kwacha, 2 units 10, just like that. And also spends 2 kwacha per unit on electricity. So if you get 1 unit, it's 2 kwacha, 3 units, just like that, it changes and so forth. So we have variable cost, we have 5 plus 2, which is giving us what? 7 there. We have 2 variable costs. The business pays 2,500 per month on rent. So that 2,500 per month on rent is what? It's a fixed cost. So we have 2,500. And the total monthly salaries of 7,500. So you see, these salaries are paid not per day, but per month. And it relates to 6 employees who are on contract. Even if the demand reduces, these people get this 7,200. So it's another fixed cost. So plus 2,700. So if we add 2,700 plus 2,500, it's giving us how much? 9,700. So that is the fixed cost. Then we are told here that the selling price. So the selling price there is what? 15 kwacha. So
sorry, you said 2,500 plus 2,700?
Yes, that is the total fixed cost.
Okay. Isn't that 5,200?
No, it's 2,500 plus 7,200 rather, not 2,700. 7,200.
Oh, okay.
So let's do this. So let's see. Do this. It's the I'm calculating something else, but I'm right. I'm saying something else in my mind. So that is the 7,200 there. So if you add it to give you 9,700. So, but are you able to see the figures, right?
Yes.
So from here we can even find what is the contribution margin. So the contribution margin is the selling price minus variable cost. So the selling price is 15 minus 7. So which is giving us how much?
Sorry, you said selling price minus?
Variable cost, 15 minus 7.
So that's 8.
So it's going to give us 8 there. So whatever the case, we'll come back to these costs. So here, we also have been given the budgeted there. So we're told that if the sales, are not the budgeted, if the budgeted sales and production there, so we have sales in the production units there is 1,500 plates. So they want to make 1,500 plates per month. What is the budgeted profit or loss for the month? So we need to find what is the budgeted profit or loss for the month. So the first thing that we need to do to find the budgeted profit or loss for the month. So budgeted profit or loss for the month. The first thing that we need to do is we need to find the sales. So sales is what you are saying that you will have if you sell all the units. Assume you've gone to order phones in China. You've spent money to order, but you've spent money on transport, you spent money on other things and so forth. So if you ordered those 10 phones now, they are in Zambia and you're keeping them, while you're keeping them, you're also paying rent for those phones. But you're saying if you sell those 10 phones in the month, how much are you going to make? That is what we call sales. So in short, sales, it's the selling price. How much are you going to sell that phone? Times the total number of phones. So we have budgeted here the sales of 1,500 plates. So if we sell these 1,500 plates, how much are we going to get? In a layman's language, someone can say, oh, it's the profit, but no, it's not the profit because there are costs associated. So it's just the whole amount of money if you sell everything. So in this case, sales, it will be selling price times the number of units that you've budgeted for. So in this case, to find the sales, it will be, well, how much is our selling price? Is 59. We have 15 times 7,000, not 7,000. How many units are there from the question? 1,500 plates. Per month you'll be selling that
1,500.
So you'll be selling 1,500. So if you do 15 times 1,500, it's giving us how much? Just multiply 15 times 1,500. It's gonna give us 22,500.
22,500.
So this is the sales. So I'm sure we understand what the sales are. So I want to know whether we're going to be making profit or loss in that month. So after we have had the sales, so those are the sales. Like if you sell everything, how much are you going to get at the end of it all? So you just get, okay, we have 15 cars. If we sell all the 15 cars, this is what we're going to get. But we have other costs associated. So we have the variable costs. You see that? So on the variable costs here, we've been told that you pay raw materials there, 5 kwacha per unit. So for all these 1,500 units, there is that you're paying per unit, you're paying 5 kwacha for each. So we have material costs. So material cost, it will be the material cost times the material cost per unit times or multiply by the number of units. So in this case, you are told that you'll be paying 5 kwacha per unit on the material cost. It's a cost associated. So it will be 5 kwacha times 1,500. It's giving us how much? Open bracket, 7,500. Because if you multiply to give you 7,500, I've put it in brackets because it is a cost, it's a negative. So you need to subtract from those sales. It is a cost associated. You want to know whether you make profit or loss at the end of it all. But it's not only the material cost that you have here. You are also paying, what are you paying for? You are spending 2 kwacha per unit on what? On electricity. So for all these 1,500 units, you need to spend 2 kwacha for each. So we'll do the same thing here. We'll put electricity cost. So it will be electricity per unit times the number of units. Electricity cost per unit times the number of units. So we've been told that you pay for how much? 2 kwacha times 1,500. It's giving us how much? 3,000, right? So we have negative 3,000 there. You see that?
Sorry, could you just repeat why they're negatives?
Because they are costs. You need to subtract them. You need to pay material costs. You need to pay electricity. You see that, eh? Then also you have other costs associated that you need to pay. You need to pay for how much? Business pays rent, 2,500. You also pay salaries there. You see that? But before we come to that, is that we can find the total cost here. What is the total cost? So let's add 3,000 plus 7,500 is giving us how much?
10,500.
So the total cost there will be
negative
10,500. So after that, we can find the contribution margin. So remember, what is the contribution margin? So the contribution margin is selling price minus variable cost. Sales minus variable cost. So it will be, how much is our sales? The sales is 22,500 minus 10,500, which will give us how much? 9,700. If you subtract that minus this, it's giving us, no, it's not giving us 9,700. Let's see. There we have 0, 0, 0. Here we have 2, here we have 1. So it's giving us 12,000 there. So from that 12,000, we are also paying for rent. Remember, there is that cost associated with paying rent. So you're paying 2,500 per month on rent. You're also paying salaries. Those are fixed costs. We already calculated our fixed cost, which is 9,700 there. So we put here fixed cost. We need to subtract also, which is the 9,700. So if we subtract there, what are we getting? Is it a negative or positive? It's a positive because that number is, so that is our profit. But if it was a negative, we're going to put loss. So if subtract 12,000 minus 9,700, it's giving us 2,300. So it's a viable business. You can invest in this business. You can sell those plates of Unshima and you'll make a profit of 2,300 per month from it, after you've deducted all the expenses and so forth, all the costs associated in the business. Clear? Then B says, what is the break-even point in plates? So how many plates should you sell in order to break even? How many of these plates, if we sell them, each plate you're selling it at 15 kwacha. So how many of the plates do we need to sell in order to break even? To say, okay, what we had invested is what we are getting, including all the costs and other things. Without making profit or loss, you as a manager need to know to say what is our target this month so that we're not operating on loss. So you're looking at BEP in other words. So BEP is equal to fixed cost over contribution margin, which is the selling cost minus variable cost. So B, we're saying BEP is equal to, what is our fixed cost? Remember, we have our fixed cost here is 9,700. So we have 9,700 over, what is our selling price? 15 minus how much? How much is our variable cost there? 7 here. We already found our total variable cost there. We said the variable cost, we had two variable costs there. So minus 7. So you can put it like this on your calculator. So if you put that on your calculator, how many plates are you getting there? So you're getting 12.5 plates of Onshima. So if you sell this 0.5, it should be a Bevla or something, but it can be 1213 if you round it off to the other side, plates of Onshima, because you can't sell point chan of Onshima unless if it's a Bevla, or 1213 plates of Onshima. In order for you to break even, you need to sell this amount of Onshima. You see that, So you need to have that in order to sell the amount of Onshima. Then the other one says, what is the break-even revenue? So the BEP revenue, which is C here. So BEP revenue is given by, is equal to BEP times the selling price. Why am I writing C? So here, what is our BEP? It's here just 1212.5, 1212.5 times the selling price, it is 15. So let's multiply. How much are we getting there? Hope you have your calculator also to check whether I am calculating very well or making mistakes. You need to also just follow through it. It is very helpful like that. So it's giving us 18,187.5 That is our BEP revenue. Then the other one is asking us to say how many plates needs to be sold to achieve the target profit of 7,000 per year. Per year, how much, how many plates need to be sold to achieve the target profit of 7,000 per year. So for you to just get the profit of 7,000 per year, how many plates needs to be sold? That's what the question is asking us there. That is D. So there for D, we are saying that the target unit. So the target unit, you are saying how many plates, right? So asking us how many plates should we sell in order to get that 7,000 profit per year. So it will be equal to fixed cost. So it will be equal to fixed cost times 12 months. Why are we doing 12 months? Because it has said per year. This one here, it says how many plates needs to be sold to achieve the target profit per year. So times 12. Because remember the fixed cost that we're given, it's per month, right? Then minus target profit over contribution margin, which is selling price minus variable cost. So let's do 12 times. Okay, so here we have fixed cost there is 9,700, remember, times 12 minus the target unit there at 7,000 over selling 15 minus 7 there, which is 8. So 9,700 times 12, it will give us 16,400 minus 7,000 over 8, or 15 minus 7. So you can put it like this on your calculator. So if you put that on a calculator, I have those numbers, I put them like that on my calculator. It's giving me 13675 per year, plates per year. Clear? Then the other thing is that what you need to find is the margin of safety. What is the percentage that we can lose on sales before we start making loss? So it's the margin of safety. So the margin of safety, which is the margin of safety, is given by, remember, it is the planned sales minus BEP. So in this case, the plan was 7,000, remember, minus the BEP. What is our BEP there? It was 12.5. So if you put those numbers in a calculator, 7,000 minus 12,125, it's giving us how much? 5,789.5. But we need to express it in percentage. So it will be equal to margin of safety is equal to the margin of safety that we found. So we have the margin, the one that we found here, which is 5,787.5 over the planned, which is 7,000 times 100. So you can put it like this on a calculator. So let's put those numbers on a calculator. That over that times that is giving us 82.67%. So you should be able to lose sales up to 82% of your company in order to start making loss. So it's good. The higher the margin of safety, the better.